Susman. Buckle up, everyone. You are strapped in and ready for the Insurance Hour with me, your host, Karl Susman, informing, educating, and entertaining one policy at a time. This is Insurance Hour. Hello. This is Insurance Hour with me, your host, Karl Susman. Thank you so much for being here today. We are going to talk all things insurance today, your favorite topic and mine. Hey, let's face it, you might not love it, but there's a lot of things that you need to understand to properly utilize your insurance policies. So let's talk about it today. Our phone lines are open. I want to talk to you. Give me a call at 559-656-0317. You can also text that number or shoot us an email to questions@insurancehour.com. Also, if you like, you can visit our website, insurancehour.com/ask, and we will jump on your question, try and get you an answer right away. We have tons of emails. We have tons of voicemails. I'm going to jump right in so we can start learning and getting educated about insurance stuff, all that fun stuff. Let us jump on the first voicemail that I have here. I have not listened to any of these, so I will do the best I can as they come out. This is voicemail 14M, and let's hear what we've got going on for 14M.
Good afternoon. This is David from Visalia. My family has a history of health issues, and I'm considering critical illness insurance. Is it a worthwhile investment? What does it typically cover?
Okay, I appreciate the call. I'm trying to know exactly what it is you're talking about when you say critical illness insurance. Are we talking about long-term care insurance? Are we talking about health insurance? I'm not entirely sure what it is you're referring to, so I want to be sure that I give you the answer that's based on your question. I think you're talking about health insurance because you're talking about pre-existing conditions. You're talking about needing to have care. Health insurance is important. You need to have it, especially if you do have some type of a health condition. I shouldn't even put it that way. Either way, everyone needs to have health insurance because we're human beings and we are bound to have something come up where we are in need of some form of health care. Now, if you have pre-existing conditions, and I have to say, I think that term is heavily overused, but for the sake of discussion, if you have what you believe to be a pre-existing condition, then you might need to either find a way to get on a group insurance policy through your employer. That's usually a good place to start, or wait for open enrollment time for the Affordable Care Act, the ACA, also known as Obamacare, where you can get on health insurance policies even if you have conditions that would otherwise preclude you from doing so. Hopefully that helps. Check with the Affordable Care Act website. You'll be able to get the majority of the information you're looking for there. Next voicemail we have is marked as 16F. Let's see what we have from 16F.
Hey there, it's Jessica from Long Beach. I'm on our condo's HOA board, and we're debating whether to increase our master's insurance policy coverage. Some residents think it's unnecessary and just an extra expense. Can you explain the importance of adequate HOA insurance? Maybe I can use your explanation at our next meeting.
Thanks for the call. HOAs are an interesting animal. You kind of love it or hate it. Let's face it, everybody hates it. Now, an HOA, for those of you that aren't familiar, it stands for a homeowners association. So you might be in an area where there are bylaws, they're called, which are laws or guidelines that need to be followed by people that are in that homeowners association area. Typically, it's a condominium, so it's a large structure with many sub owners inside, subunits inside. Although there are HOAs that cover single family homes in neighborhoods, right? It really just depends. So what an HOA is designed to do is to protect the integrity of all of the property that the HOA governs, right? That's the over-encompassing concept behind it. So if you're let's talk about an individual large building, right? Like you see on the side of when you're driving down a large boulevard, it's a large building with lots of individual condominiums inside. The HOA is going to be responsible for doing things such as maintaining that building. If the elevators need to be updated, if there's some type of a loss to the structure itself. Maybe the roof needs to be replaced. Things of that nature, a homeowners association is going to make the decisions and change. Another example might be maybe there are gates that open and close to the parking area. Well, who decides when those gates get oiled? Something as simple as that. Who decides whether those gates need to be replaced? The homeowners association is going to do that. So the homeowners association board, right? People that are on the board of directors are making those decisions. Well, who are these people and who put them in control? Well, the residents, the owners of that particular building in this example, have to elect people to be on the homeowners association board. Now, this person calling in is, I would assume, on the board, and she's talking about adequate coverage. Now, homeowners association policies, again, they're going to cover things like the physical structures as well as the liability exposure. What if, let's just say, the homeowners association has to make a decision? Do we purchase earthquake insurance for the entire building or not? It's a pretty big decision to make, right? It's going to impact a lot of people, basically everyone who has an ownership in that building. And let's say they decide, nah, I don't want to purchase earthquake insurance. Let's say there's an earthquake. Residents might say, hey, they made the wrong decision. They might want to sue or hold responsible the board of directors or people that are on the homeowners association. It's a little bit messy. So one of the things you want to be sure you have, and I think that's where we were going with this particular question when we were talking about coverage for an HOA policy, is board of directors coverage. You want to be able to have liability protection to protect the people on the board from the decisions that they make. And it sounds funny because they're making the decisions, why they need protection. And again, the example I just used, you can imagine. They might have done the research. They might have figured out how much it would cost to obtain earthquake insurance on that particular building. And they might have realized that it was just going to be cost prohibitive to do that. And remember, if they purchase an earthquake insurance policy, they're going to have to charge all of the unit owners their equal amount or their fair share, however it's broken down, to pay for that policy. They might have decided that it was too much money. Again, they have the ultimate say. So having board of directors insurance on a homeowners association policy is a very, very important coverage to have. Now, you'd mentioned that you wanted to perhaps talk about some of this during your next board meeting. Feel free to share my information if you'd like. I'm happy to answer more specific questions for them, specific to homeowners associations and specific to the types of coverages that are out there, what might be covered, what might not be covered. One policy is not exactly like another, so it does really warrant taking some time. Speaking of time, it's time for a break. Let's take our first break of the day, and we will be right back. Hang in there. Let's talk about earthquakes for a minute. Look, we know we live in earthquake country here in California. Powerful, devastating earthquakes have happened here before, and science says that they will happen again. They can't tell us exactly when. They can just tell us that it is going to happen. Count on it. Prepare for it. Did you know that earthquakes are not covered by your homeowner's insurance policy? You need a separate policy to give you the peace of mind that you will be able to recover without getting financially wiped out the next time we get hit with a big one. There is a great company here in California that will provide you with earthquake coverage you need at a price you can afford. That company is GeoVera. I have a policy through GeoVera. I really like how easy it is to choose from all of their great coverage options, backed by the financial strength that lets me know that they will be here for me when I need them the most. Go to getquake.com/insurance hour to learn more. That's getquake.com/insurance hour. Make sure you're ready for the day when the ground shakes again. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here and learning about insurance with me today. The phone lines are open, 559-656-0317. You can call or text that number. You can also shoot us an email to questions@insurancehour.com, or if you like, just jump on the old computer, go to insurancehour.com/ask, and you can get your post your question there. We'll try and answer your question for you right away. Before I get back to some voicemails we have today, I want to thank again our sponsor of today's show, GeoVera Insurance Company. They are there offering earthquake insurance, and let me tell you, I can purchase my own earthquake insurance wherever I want. I can get quotes wherever I want. I'm a broker. I've been doing this a long time. Everybody wants me to have their policy. I personally have had GeoVera for my own home for a very, very long time, probably excess of 10 years. I choose them because I think they're the most financially solvent. I like the options. I like the prices. So if you want to get a quote for your earthquake insurance, double check, go ahead on to insurancehour.com. You'll see a link there for GeoVera. You can get your quote for earthquake insurance. Tons of options. And we thank them for sponsoring today's show. And speaking of shows, it's time to get back to our voicemail questions. This is voicemail that is labeled 22F. So let us see what 22F has to say for us today.
Good morning. This is Mia from Fremont. My son just got his driver's license. Proud mom moment. But I'm nervous about how this will affect our auto insurance rates. Any tips on how to keep costs down while ensuring he's properly covered?
Proud mom moment indeed. Well, yeah, we've talked about this in the past and it warrants talking about again. Remember, depending on what state you're in, auto insurance is going to be impacted very heavily based on the number of years of experience you have driving, right? The longer you've been driving, the more experience, typically the better a driver you are. And then, of course, we get to a certain age, it starts to go the other way again, right? For all sorts of reasons we don't want to talk about. So when you have a new driver, okay, you've got your proud 16-year-old, let's just say, that just got their license. How much driving experience do they have? Well, the answer is none. Now, you may have driven with them. Of course, you have to for them to get those hours and able to go and qualify to take their driver's test, which they then have to pass. Excuse me, but I'm talking about experience on their own, driving on their own. And the answer is none. They are as green as can be. They don't have any experience driving. They don't know, I don't want to say they don't know what they're doing. They don't have the experience. Let's just leave it at that. So who do you think is the most likely to potentially have an accident? Well, statistically, people that have less experience driving are more likely to have accidents. They're more likely to just get into little fender benders. Maybe they speed, they skip through a stop sign. Stuff just happens. It's not because your kid's good or bad. I have 2 kids. I'm a proud dad, right? And I remember when they both got their license, it's a stressful time. And it's something they have to learn because, again, it's a new skill like anything else. So any tips for keeping the rates down? Yes, the tip is find a way to have them have as much experience as possible when they get their license. So when they do, you don't have to worry as much about them getting a ticket or accident, because if they do have an incident when they're a new driver, then if you think the rate went up when you add them as a new driver, just wait and see what happens when that new driver actually has an incident. So take as much time as you possibly can to teach them to drive. Let me tell you a true story. I obtained my driver's license in Oregon. I was living in Portland at the time. And back in the day, you were able to get your permit when you turned 15, as long as you were able to pass the test. Not 15 and a half. There were no special other factors you had to qualify for. So turned 15, got my permit. And I remember my father told me that now that you have that permit, I will never drive when you're in the car until you get your license. You will always drive. I don't care if it's just us driving to the market. I don't care if it's the whole family in the car. You will be driving 100% of the time. Now, as you can imagine, not everyone was so thrilled about this. My mother was a little more concerned. My sister probably didn't love it either. But his rationale, he said, was that I know you're going to get your license at 16. So I really only have this 1 year to give you as much experience as I can when I'm in the car with you, when I'm watching, when I can guide you, when I can explain to you, when I can coach you. So for that entire year, anytime the family drove anywhere, if I was ever in the car, I was not a passenger for the entire year. And yes, I had a ton of driving experience, as you can imagine. Side note, just for fun, I also was not allowed to listen to music. I did not put the radio on. I didn't put any cassettes in the cassette player. I didn't listen to anything. The idea, again, was for this first year, you're going to be in learning mode and you want to be entirely focused. Guess what? When it came time for me to get my driver's license and I went, it was no big deal. I mean, I effectively had been driving for a solid year. And that's a long time when you're literally driving every single year. So my personal recommendation would be make sure that you coach and you actually teach your kid how to drive. Don't just assume that they're going to learn enough by letting them drive on occasion. And hey, if they pass their test, they must know how to drive well enough. As far as once they have that license, check with your insurance agent or broker and find out what discounts might be available. Some companies will offer a discount for good students. Some will offer a discount if they've taken certain extra courses. So spend the time to ask your agent or broker what discounts might be out there for a new driver. But understand, it is not going to be cheap. It is going to cost money because, unfortunately, the odds of them having an incident are higher than for someone with more driving experience. So hopefully that will help you. Let us get to our next one. Why don't we jump to, just looking through all the voicemails. Why don't we just jump to, well, we did 22F. Why don't we try 23F? We'll just go right in order. Why not? So 23F, what do you got for us today?
Hey, it's Michelle from San Jose. My golden retriever buddy is like a member of the family. Lately, I've been thinking about getting pet insurance, but I'm overwhelmed by all the options out there. What should I look for in a good pet insurance plan, and is it really worth the monthly cost? Any personal experiences would be super helpful.
Buddy is a member of your family. Pets are not like members of your family. Pets are members of your family. Whether you're a cat person or a dog person, and we had that debate not that long ago, so I'm not going to go there again. But I know we've talked about pet insurance before, and I want to talk about it again because we have somebody asking. We're coming up on a break, so I don't want to start and then have to stop right away. So what we're going to do is we're going to pause. We're going to take our next 60-second quick break. When we come back, we're going to talk about pet insurance. We're going to talk about the options. We're going to talk about the pros and cons. We're going to talk about whether I recommend it, and if so, where I recommend going. All coming up when we come back from our break. This is Insurance Hour, and I'm Karl Susman. Stand by.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Gray.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for learning about insurance with me today. Really appreciate it. Phone lines are open, 559-656-0317. Call that number. Text that number. Just remember that number, 559-656-0317. If you're an email person, go ahead, shoot us an email to questions@insurancehour.com. Or if you're a website type of person, go to insurancehour.com/ask, and you can post your question there, and we will get back to you right away. Before the break, we had a question about pet insurance. First, I want to go ahead and say it again. Pets are not like members of your family. They are members of your family. And like members of your family, health insurance is definitely something to be thinking about. By the way, when someone says pet insurance, they're typically talking about health insurance. They're not talking about pet disability insurance or pet life insurance. Well, pet insurance, for the most part, encompasses the concept of health insurance or payment for bills, that sort of thing. Here's where I am on the concept. Now, pet insurance, when you get a policy, they're not going to ask you, hey, has your pet had any pre-existing conditions? They're not going to say, has your pet broken its leg? Does it have some type of stomach disorder? Does it have anything going on with it? They're only going to ask the breed of the dog, for the most part, and the age. Now, because of that, they're going to get all sorts of people that are buying the policy, right? They're going to get people whose dog does not have any issues, and they're going to get people who have already gotten bitten, with some type of large medical bill for their animal. But because the insurance company is not asking those questions, it's not able to differentiate between the two. What that means is that you're going to be in a situation where the rate is going to be reflecting both the dogs that don't have any health conditions as well as dogs that have had the health conditions. And you know what that means? That means it's not going to necessarily be as inexpensive as we might like it to be. So the first thing with pet insurance to keep in mind is that it's not necessarily inexpensive. Some policies will put waiting periods on there to try and weed out the animals that have had conditions, right? They'll say, well, we're not going to pay for anything unless it's an accident for the first 6 months, let's say, or something along those lines. Some won't. It's complicated. The other issue with pet insurance is even if you get a policy and you get your rate, most of them, the rate will increase as your animal gets older, which makes sense, right? Older dogs tend to get sicker than younger dogs, and you're paying more money for the insurance as the animal's getting older. So you get to a place where you might get to what, the level of diminishing returns, where if you start adding up all of the premiums that you've paid for the pet insurance from when you started through the time when the dog's old enough to actually have a use for it, you might be getting pretty close. Unless something fairly significant happens, you might have almost been self-insuring yourself. Now, again, this is going under the assumption of, I say the average animal, and I don't know if that's an average or not, but I would like to think anyway that the average animal doesn't always get sick. It doesn't have chronic health conditions. Hopefully the majority of them are healthy, at least for the better part of their lives. So if you're able to find a policy that seems inexpensive enough for you and you want to have that additional coverage, go for it. However, if you're looking to get a policy thinking that, well, this is totally going to pay off, I'm going to pay this money now, but I know it's going to be, come back in spades. Well, unless, something horrible happens, like your dog gets hit by a car or something along those lines, the finances don't tend to work out that way. Finally, one last thing on pet insurance for you to be aware of, and that is that they are not created equally, meaning that you are going to see a wide variety in the types of policies that you're getting. It might be that one policy covers certain things and another one will exclude those exact same things. So they are not commodities and they are not all created the same. So be sure when you're comparing policies that you're actually checking into the specifics. Don't assume that they're going to be, well, pet insurance is pet insurance. They are not. Next up, we have a voicemail from 37M. I love how these get named. So let's see what 37M has for us today. Let's hear it.
Hello, this is Liam from Oakland. My wife and I just welcomed our first baby boy last month. It's been a whirlwind. We're thinking about getting life insurance to secure his future. Should we both get policies? And what's the best type for new parents like us? Any guidance would mean a lot.
Thanks for the call, Liam. It's life insurance it's interesting. You said, should we get it for him? And my first thought was, well, are you looking to purchase life insurance on the child? And that is something that's done. It's not morbid. It's just something that is done. And we can talk about that at another time. Maybe I'll get a question about it now. But the question is, what should we do? Do we both need to get a policy, meaning both parents? And I like to sort of fall this way with it. Let's be old-fashioned, very old-fashioned, and say that one of the parents tends to be the primary breadwinner. They're the one that's generating the majority of the income. So you would say, well, I need life insurance because if that person dies, we won't have that income anymore. That's typically what life insurance is for. Now, just because someone does not have income coming in, it doesn't mean that the parent that's at home, the stay-at-home parent in this example, is not a financial need. If you have to replace that person, if that person is no longer around, believe me, it is going to be extremely costly to have somebody that's available anywhere near the amount of time that stay-home parent is during the day. It's not cheap to have someone stay 8 hours, 9 hours, 10 hours a day to help with your child. So I am a strong advocate. If you're purchasing life insurance because you want to have coverage to protect your child, you want to be sure that there's money around for the surviving parent to be able to take care of them. Well, there's two parents. And of course, if they're both working, then you wouldn't even need to make that initial argument. You would simply know that, hey, there's two parents, there's two incomes, we need to replace them both. I just want you to be aware that income is not necessarily just money coming in from the outside. Income is simply money that would need to be spent, providing that someone is no longer available to provide that skill. And that skill might be generating income, or giving care with your child. Now, also keep in mind, some people will purchase life insurance when they have a newborn because they want to know that there's a large chunk of money there if something were to happen where they just would never have to have the kid worry about money. And that's okay too. Some people will attempt to over-insure because they just don't ever want to have issues with finances come up. It's bad enough if a parent is lost, even worse if you can even imagine losing both parents. They want to be sure that they have a big chunk of money, so that's the one thing that does not have to be worried about. So be sure you're talking with your agent or broker, your licensed agent or broker that knows about life insurance, that can talk to you about those options, because you can't necessarily just get any amount of coverage. It has to be justifiable, right? You can't make $50,000 a year and want to get $15 million in life insurance. There might be some concern of what plans you have for yourself or your spouse. At any rate, let's take our next break. When we come back, we'll talk more and we'll get more of your voicemails. This is Insurance Hour you are learning from, and I am your host, Karl Susman. Be right back.
Have you been dropped by your insurance agency or seen your premiums skyrocket? Susman Insurance is here to help. We're a family-owned and operated insurance agency that's been serving our community for 2 generations. At Susman Insurance, we know how stressful it can be to find the right coverage, especially when prices go up or you're left without insurance. That's why we're committed to finding you competitive rates, whether it's for fire, home, earthquake, flood, auto insurance, you name it. We've got you covered. Give us a call or send a text to 310-820-5200 or visit us online at sussmaninsurance.com. Plus, stay updated on all things insurance by joining our text group. Just text 567-4CARL with a K. That's 567-367-5275 to get the latest updates straight to your phone. Susman Insurance, your family's insurance solution.
Hello, hello. You are learning from Insurance Hour with me, your host, Karl Susman. Thank you so much for being here and learning about insurance with me today. We are halfway through and learning as we go. Phone lines are open, 559-656-0317. Call that number, text that number, memorize that number. Send your questions in to questions@insurancehour.com or jump on the website, insurancehour.com/ask. Put your question there. We will get back to you. We are going through voicemails, it seems like today. Phones have been quiet, so we're going through messages left during times the show is not recording. We're going to get to question now, voicemail number 103M, and let's see what we have.
Hi, this is Samuel from Orange. I've got a classic car that I only drive on special occasions. Should I get a regular auto insurance policy, or is there special insurance for classic cars? Want to make sure it's properly protected.
Great question. Classic cars. I've always envied people that were into cars. I don't know why. I mean, I've never been a real car person. I don't know. Car's a car. And I know some people are so into their cars, especially the classic models, and they're fancy and they're unique and they're all that. So first, congrats on being on having that as part of as a hobby, if you will, if something that you enjoy. And yes, classic cars definitely need to be on special auto insurance policies. You are not going to want to think of a classic car, year, make, and model. And I can't. You're not going to want to take your classic car and put it on your standard auto insurance policy because you are not going to get the value of it that the vehicle is worth in the event there's some type of loss or damage. Now, classic car policies will tend to work in such a way where you can have the vehicle appraised. You'll be able to take that appraisal. You'll be able to go to the insurance carrier that you're looking to purchase a classic car policy from and say, here's the value of the car. What will it cost in the event this vehicle is lost, damaged, it's totaled, whatever the case may be. What amount I want to insure it for is what this appraisal amount is, and you can find out if there's a carrier that will write that exact amount. Some of them will, some of them won't. Depends on the value of the car, depends on the usage of the car. They're going to ask questions such as, when was the vehicle appraised? How often is the vehicle driven? Is it taken to any particular special events? And as importantly, they're going to ask how it's registered, because certain classic vehicles that are not driven frequently are going to have a special type of registration that you pay to the Department of Motor Vehicle, where it's basically a classic car. You're telling the DMV, hey, I don't drive this every day, so I want to pay less. And there are even other types of registrations for vehicles that you might have that say, hey, I'm never driving this car. I literally put a diaper on it, like in Ferris Bueller's Day Off, right? They put a diaper on the fancy car. They never take it anywhere. Maybe there's some type of convention and then they'll offload it and they'll take it there. But for the most part, that car goes nowhere. These are all factors that will impact how much you're going to be paying for classic car insurance. So that's the long answer. The short answer is, by all means, yes. If you've got a classic car, if you've got a car that you think is worth more than the average car of that year, make, and model, then by all means, you want to talk to your licensed agent or broker to find out. Look, that's your trusted advisor. Ask them either way. It's a great question. Hopefully, I've given you a generic enough answer, and it's something that you can go on and ask your local yokel. Speaking of which, let's get to our next local yokel question. This is voicemail 104F, like Frank. Let's see what we've got.
Hello, this is Amelia from Garden Grove. I'm renting an apartment and have some pretty valuable artwork. Does renter's insurance cover high-value items, or should I look into additional coverage? Don't want to risk losing them without proper insurance.
It's a great question. Renter's insurance is one of the more overlooked types of insurance policies for people to have. If they buy a home, they have a mortgage, the bank basically says you must have insurance. Buy a condominium, have a loan, again, the bank's going to say you must have insurance. People that are renting don't always think about it. They think, well, if the landlord of the building requires me to have a renter's policy, I'll get it. And they get it because the landlord requires liability insurance. And that's fine. That's definitely a legitimate reason. But that's not going to do much for you in the event of someone breaking in, stealing your stuff. Now, you mentioned in case you lose something. Now, remember that renter's insurance, typically insurance policies in general, unless they're very specifically written to cover, will not cover you losing anything. You can't lose something and have coverage unless the policy specifically has provisions for that. Now, is it stolen? Yes, theft can be covered more generically. Loss, not so much. So be aware that in the event that you're going to be having a policy you're purchasing, don't look for it to be covering you for loss unless you are very specific in asking for that and finding out if it's something that you can get. Now, forgetting loss for a moment, let's talk about theft or damage in a fire, or maybe it's damaged because of water that comes in a storm. Who knows what the case might be? You're going to be looking to add those items to the renter's insurance policy. Renter's insurance policies do come with sub-limits, right? Special limits that are on the policy for certain items, jewelry, watches, furs, fine arts, cameras, cash, guns, all sorts of things. Because nobody knows specifically who's going to have a lot of that stuff and who doesn't, if they priced renter's insurance, assuming everyone has tons of all of those things, the policies would be ridiculously expensive. So instead, they put little sub-limits on them, and people that have large amounts of certain items, like camera equipment, will go and say, hey, I've got lots of camera equipment, and then the policy is modified to take that into consideration. So hopefully that answers your question. You do want to get coverage for it, for sure, but you do need to ask for it to be sure you have coverage for loss if you're looking for it, if it's available, but certainly be sure you list that you do get those sub-limits raised or get a special policy to cover them in the event that they're expensive enough. Thank you for that. Let's go on to the next voicemail. This one says 98M like Mary. Let's see what we have here.
Hey there, this is Aiden from Sunnyvale. I just started a small food truck business, loving it so far. What kind of insurance do I need to protect my business, vehicle, and myself? Don't want one mishap to derail everything.
Hey, food trucks are awesome. It's funny because we take them for granted now. Food trucks are a thing, but there was a time we didn't have food trucks. That was not a thing. Yes, you need to look for very, very specific insurance for food trucks. We're going to take a break. When we come back, let's talk a little bit about the types of coverage you would be looking for food trucks. Certainly can't squeeze it in right now. And you asked the right questions. You asked, what do I need for me? What do I need for the vehicle? Lots going on here, lots to unpack. So when we come back from this break, we're going to talk about insurance required or necessary or suggested for sure if you have a food truck. So sit tight. 60 seconds goes by like that, and we will talk about those types of insurance options. This is Insurance Hour with me, Karl Susman. Stand by.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Gray.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour you are learning from with me, your host, Karl Susman. Thank you so much for spending some time here with me today learning about your favorite topic, insurance. Phone lines are open. We're taking your questions, 559-656-0317. Call that number, text that number. Shoot us a question to questions@insurancehour.com, or if you like, jump on the computer, go to insurancehour.com/ask and put your question there, and we will get back to you as soon as we can. Can't believe it, but we're over halfway through the program today, and we've gone through, 1, 2, 3, 4, I can't count how many voicemails that you have left. If you have not heard them all, we've had some really good questions. Go back, listen to the show in its entirety. You can find us on YouTube, on Apple Podcasts, Spotify, pretty much everywhere. Just search for insurancehour.com and find today's show, and you can go back and listen to it. Before the break, we were talking, we had a voicemail that came in asking about insurance for having a food truck. Let me break it down into two parts. One is for the food truck business, and the other is for the vehicle. Now, first, let's just get this out of the way. Your auto insurance policy is not going to cover either of those things. Mic drop.